Hello everyone, my name is Tim, and today I'm going to be going over a poor man's covered call and the wheel strategy. Keep in mind, this is a disclaimer. I am not a financial expert and I'm not your financial advisor, so this is for educational and entertainment purposes only. I am not telling you to invest in anything. This is just how you would go about doing a poor man's covered call or starting the wheel strategy. Whether you do so or not is completely up to you. There is risk when you invest in the stock market. I am going to be going over how to set up a poor man's covered call and also show you the profits I've made so far doing a poor man's covered call on the Riot blockchain stock, as well as how to set up a wheel strategy and show you how I've started to sell a put to begin the wheel strategy on the workhorse stock. If you like this video, don't forget to hit the like and subscribe button. It does greatly help out my channel and help me grow and make more videos like this. So the poor man's cover call and the wheel strategy are both very similar. They are different in how you go about doing them, but the end result is basically the same, that you're trying to make weekly income by selling covered calls. The difference is the collateral that you need and also how you start the trades off. I will go over the poor man's covered call first. Basically, to start that, instead of selling puts like you do to start the wheel strategy, you would buy a deep in the money call several months to a year or more out in the future. And that gives you that collateral that you need to start selling covered calls. I recommend doing at least a delta of 70 on this call that you buy, but closer to 80 or 90 is better if you can afford the premium to pay for that in the money call, because you will have to pay to buy the call, and the further out in time you go, the more expensive it does become. But still, it is usually still cheaper than buying 100 shares of the stock that you're interested in. And I will go over examples of this a little bit later in the video. And then once you have that in the money call, you can then start selling covered calls using that in the money call as collateral. So you would go for at least a delta of 30 out of the money. At least that gives you a 70% chance for the strike price that you chose to stay out of the money. Now, if there are earnings coming up or an ex-dividend date for the stock that you chose, that could influence if it stays out of the money or not, so keep that in mind. But then you can collect premium from selling those calls, and as long as the stock stays out of the money, you would be able to keep the premium when the stock expires worthless. Or the day of or the day before, you can simply roll it over to the next week, buy it back cheaply, and then sell for more premium for the next week. That's what I've been doing personally, rather than just letting them expire worthless. I've just been rolling them out on the last day. So that is one way to collect money every single week for selling covered calls. You do have to kind of monitor it a little bit more than you would the wheel, just to be safe, because you have to keep in mind you don't have 100 shares. So if this is to be assigned for some reason, you would have to make sure that the differences in the strike prices plus the premium that you collected make it to where you don't lose money if you get assigned. Again, I will go over this a little bit later in the video. With the wheel strategy, you start that off by selling a put. So you have to make sure you have enough collateral or cash to cover 100 shares at the strike price that you chose. So for instance, say it's Apple and you chose the strike price of $100, you would need to make sure that you have 100 times 100, or $10,000 to buy 100 shares if Apple stock price goes below that strike price that you chose. And if it doesn't and it stays out of the money, you still get to keep that premium and then just get to sell puts again until eventually you do get exercised and you have to buy 100 shares, at which point then you can sell covered calls using those 100 shares as collateral. So it does take a little bit more premium to do this as a wheel strategy, but it is a more kind of set it and forget it, because the only thing you have to keep in track of is your cost basis to make sure that when you're selling a covered call, you have to make sure that you are selling a covered call to where you're not taking a loss. So for instance, if you sell a put for $100 on Apple, it gets assigned. You get 100 shares at $100, then you would most likely want to sell covered calls at $105 or $110 just to make sure that if the stock price goes up again and it gets assigned, you not only make money from the premium, you make money from the stock going up, and that way you don't lose money. So here you can see my account on Tastyworks. It is in privacy mode, so you don't have to worry about seeing anything you don't need to. But I at first attempted to do a wheel strategy on the Riot, which is a Riot blockchain, which is tied to Bitcoin and Ethereum and other cryptocurrencies. I was going to try to do the wheel strategy first on February 11th. I sold a put at 20 and I got $2 in credit for it, but then it started to go close to being in the money, and so I decided at that point to just buy it back for a loss of $4. And I wanted to reevaluate, so I started doing research into the poor man's covered call. And that's when, about almost 2 weeks later, I decided to buy a June 18th, 2021 $46 strike call at $2,630. And I sold a March 5th, 2021 $71 strike call at $395 in premium, which offset that $2,630 to 2,200 something dollars. I'll give you the exact figure when I show you my spreadsheet in just a second. And then on March 3rd, I decided to roll over that strike, the call that I sold. So I bought it back for $40 and sold a March 12th call at $66 strike because the stock had actually gone down. So in order to keep the 30 strike, I had to go down in the strike, and so I got $258 in premium for that, for a total profit of $218. And then on March 10th, I bought that one back for $133 and sold another 70 call for March 19th for $361, which gave me a profit of $228. And that's where I am currently at now. So that's my poor man's covered call on the Riot blockchain. I will be reevaluating again at the end of the week when this is due to expire, and I will determine if I want to do another cover call. If I want to roll it out again, I most likely will, but since there are earnings that are coming up for Riot, I might want to be a little bit more careful and take a little bit less premium, but raise the strike price to maybe closer to $75 to $80, just because I don't know how the stock will react after earnings. So I might want to play a little bit more safer then. This is the spreadsheet that I use to keep track of my poor man's covered call. You can see here I put in the date purchased, February 24th. The date that it expires is June 2021. The stock price when I bought it was $54.25. The strike price I chose for the in the money call was $46. And like I said before, it was $2,630, but then minus the $395 I got in premium for the March 5th covered call, lowered my cost basis to $2,235. And then when I rolled over, you can see that I got $218 in premium. And then when I did the last rollover, I got $228 in premium, or $2.28, but that equates to $228, which so far has brought me $446 in covered calls because the stock price has gone up. And right now, my leap is actually giving me a profit of $735. This would only apply though if I were to let my covered call expire and then just sell back my in the money call. That's how I would get the $1,181 in profit. That would not be the profit I get if for some reason the stock were to climb suddenly past my covered call and I were to get assigned. What that profit would actually be would be the $446 in covered calls, and then it would be the differences in the strike price. So right now, since I have a $46 leap and a $70 strike price, that's a $24 difference, or $2,400 once you multiply it by 100. So basically, that means that the buyer, if they were to exercise at $70, if the stock price goes above $70, they would have to pay me $7,000. Then I would pay $4,600 to buy 100 shares to give them at the strike price that I bought the in the money call at, and that would leave me $2,400 in profit minus the 2,235 that I paid for the in the money call, which would leave $165. But then you add in the $446 that right now I have from the covered call, which means I would have over $500 in profit right now if I were to get assigned on this. So now back on Tastyworks, I do have just one stock right now I am attempting to do the wheel on. It's the Workhorse stock, which is the stock symbol ticker of WKHS. I sold a put for the $14 strike price and I got $38 in credit. Right now, the current stock of it is at 16.75. So that has a week to stay above my strike price, and that means I would be able to keep that profit and then sell another put until eventually I get assigned, or I decide to do the same thing for another stock. But for that one, it's fairly simple, and now I will go into how to set up both of these in both Tastyworks and Robinhood. So now here in Tastyworks, I'm looking at the Mara, which is the Marathon Digital Holdings. It's another crypto mining stock. Just one that I just happened to be looking at before, so I figured I would show you how to do a poor man's cover call and also a wheel strategy on this stock. So in order to get started with the poor man's covered call, you would need to look far out in the distance. So I would suggest either the September 17th or the January 21st of 2022. If you wanted to go for the January 1st, 2022, you would look at the in the money stock prices and also the delta. Like since the deltas for all of these are above 70 already, due to the price of the stock and how quickly it's gone up recently. What I would instead look at is the in the money percentage plus the delta. So compared to the right now $40.70 stock price, I would try to do around half that. So I would probably look at around the $20 strike price. So that would have me have an 89 delta, which is the same thing as basically having 89 shares. And it is also 39% in the money. So that means I would need to basically pick a strike price for my covered call that's out of the money a little bit more to show you the difference. So right now, due to the ask price, whenever you're buying, you go by the ask price, and when you're selling, you go basically by the bid price. So right now, I would have to pay $3,000.50 for just the naked call, but I don't want to do just the naked call. So in order to do this correctly, you would need to sell a cover call to set off your basis. So since this is right now around $3,000, I want to look at least $30 difference between my strike price. So I would want to look at least around the $50 range for the strike price just to make sure that regardless of what happens, I don't lose any money. So for instance, if I were to sell the $50 strike, it would lower my cost basis to $2,705 and also offer me protection to where if the stock were to rise suddenly to over the 50, I would still make profit in this trade. So then you would simply review and send. Tastyworks does charge a commission, so you have to pay a little bit more with Tastyworks than you do with Robinhood. And then you would send this order in, you would have your buying power reduced by this amount, and then you could keep track of it on that spreadsheet, which I can try to link in the description below, so that way you can use it yourself. And then you would just keep updating that every week, and you would be able to show how much profit that you're making. And now I'll show you how to do the same thing using a wheel strategy. So now to start the wheel strategy, if you want to do it this way with Mara, you would need to sell a put. So I would look at one that's just a week out. Depending on how much money you have in buying power, that would also help determine what your put price is going to be. For instance, if I had just $3,000, I could only do the $30 strike price for selling the put, because 30 times 100 is 3,000, and that's how much I can afford if the price were to go down and I would be assigned these 100 shares. So basically, you would sell the put, you would get $63 in credit, and then Tastyworks would reduce your buying power by $1,377.65. Now, that is not how much you would actually have to have. Like I said, you would have to have the $3,000 total. But right now, Tastyworks will only reduce it by $1,377.65 because I have a margin account. If you have just a pure cash account, you would most likely have to have that reduced by the straight 3,000 to ensure that you could buy the 100 shares at $3,000 if you were assigned. And then once that happens, you would just start selling covered calls on this side, and you would use your 100 shares as collateral. For instance, you could be a little bit more daring with the covered calls if you have the 100 shares, as long as you make sure you're above the strike price that you sold the put at. So for instance, you could sell a covered call at the $43 strike price right now and get $345 back in premium. And then as long as the stock doesn't go up 43 and above, you will be able to keep that premium and your shares. And now I am on Robinhood, and I can show you how to do the same thing here on Robinhood, how to set up a poor man's covered call, and also how to start the wheel strategy. So again, first off, with the poor man's covered call, you would go to trade options. I would use a drop down to go to January 21st of 2022. Again, look at the in the money options. You can up on the computer be able to look at the deltas and everything just by clicking on it. If you're on the mobile site, you will have to click on the actual strike and click on the little hyperlink where it says the bid and the ask, and that will show you what the deltas are. So again, depending on how much you want to spend, saying you have the 3,000 like you were going to do with the wheel strategy, but you want to do it more long term, you could do the $15 in the money call for 3,038 that has a delta of 92. So that's the same as having 92 shares. And with having 10 months away, you have plenty of time to do a lot of covered calls and make a lot of weekly income. And so then you see it's at $3,040 for the long call. And then I would go to sell a call, and I would go back up to March 19th or whatever the current week is that you're doing this. I would again look at the deltas. So I would try to do around the 0.3 delta. I know you're not going to get nearly as much profit doing it that way, but so for instance, here's a 0.2934 delta. So here it's showing $193, which would bring my total cost to $2,845. But then you can again keep doing this every week, and as long as you keep track of your cost on the spreadsheet or another spreadsheet that you make for yourself, then you can make sure that you're making a profit doing this every single week. Now, to start the wheel strategy for Mara on Robinhood, it's much simpler. You just go to the closest expiration date, or maybe another week out if you want to collect a little bit more premium. I personally I like doing it about every week because if you will make more premium if you do it every 2 weeks, but I just like being able to have a weekly income personally, but this is all up to each of you. So if you prefer collecting a little bit more premium, for instance, here at the $30, you would only get the $68 credit for a March 19th expiration, whereas if you do the March 26th for a $30 call, you get 177. But at the same time, it's not that much different if you do both of the, if you do 2 weeks worth of $30, it's about a $1 difference. So, and at the same time, it's easier to roll out at a week time than it is for a 2 week time frame. So that is something to keep in mind. Thank you for watching. I hope you found the video informative and helpful. And if you have any questions about the poor man's covered call or the wheel strategy, you can ask me in the comments and I will be happy to get back to you. I hope you stay safe and stay healthy. And don't forget to hit the like and subscribe button down below. It does greatly help me out.